हेलो एंड वेलकम एवरीवन। सो आज हम स्टॉक मार्केट के तीन सबसे पावरफुल टूल्स को समझेंगे। वी टॉकिंग अबाउट सपोर्ट, रेजिस्टेंस एंड ट्रेंड लाइंस। सीरियसली, इनको अगर आसान भाषा में सीख लिया ना, यू बी एबल टू प्रेडिक्ट मार्केट मूव्स सो मच बेटर।
Look, it doesn't matter if you're a new trader or a pro, right? There's always this one question spinning in your head. When do I buy and when do I sell? I mean, getting the timing right, that's the whole game, isn't it? So what's the answer?
Well, the answer, believe it or not, is hidden in these three simple technical tools. Yep, support, resistance, and trend lines. Once you really get a handle on these, trust me, reading the market signals is going to become so much easier for you. Okay, so let's kick things off with the very first concept. Section 1, what exactly are support and resistance? The easiest way to think about this is to imagine the market as a room. It's got a floor and it's got a ceiling. First up, let's talk about the floor. That's what we call support. So picture this. A stock's price is falling, and then suddenly it hits a certain level and just stops. And not only does it stop, it bounces right back up. So why does that happen? Well, it's because at the specific price level, the buyers get really active. So here you can really see the constant battle between support and resistance. At the support level, the floor, buyers look at the price and think, hey, this stock is cheap now. And boom, demand just shoots up. And then on the flip side, at the resistance level, the ceiling, the sellers look at the price and go, wow, this is getting expensive. And they start selling off, which causes the supply to increase. So yeah, as we just saw, resistance is literally the exact opposite of support. It's that ceiling where a rising stock price just hits a wall, stops, and starts to fall back down. This is the point where the sellers completely overpower the buyers. Now, there are a few things you absolutely have to remember about support. First, it's created by buying pressure. Second, it's not always just a straight, flat line. It can also be dynamic, meaning it moves. And the most important point of all, if that floor breaks, well, that same floor often turns into the new ceiling. This right here, this is a golden rule of trading. A level that was once a floor, once it's broken, becomes the new ceiling. We call this concept role reversal. And the psychology behind it is actually pretty simple. Imagine you bought at a level thinking it was support. If it breaks and goes down, when the price comes back up to your entry point, you just want to sell and get out a break even, right? Well, that collective selling pressure is what turns the old floor into a new ceiling. All right, so now let's move on to our second tool, trend lines. See, support and resistance tell us where the price might stop, but trend lines, they tell us which direction the market is actually heading. And what is a trend line? It's actually a very simple thing. All you do is connect at least two lows or two highs on a chart with a straight line. And just by doing that, the market's trend becomes crystal clear. It tells you immediately who's in control, the buyers or the sellers. Broadly speaking, there are really only three types of trends you'll see. First, you have the uptrend, which is when the market is going up. Second is the downtrend, when the market is heading down. And the third is a sideways trend, where the market is just kind of stuck, moving within a range. So when a market is in an uptrend, it creates what we call higher lows. This just means that each new dip is higher than the previous one. When you connect these lows, the line you draw is an uptrend line. And as the price moves up, this line moves up with it, acting like a moving floor where buyers consistently step in. And you guessed it, the exact opposite happens in a downtrend. The market makes lower highs. The line connecting these highs is called a downtrend line. This line acts like a moving ceiling, or what we call dynamic resistance. And you'll often see the price hit this line and then fall back down again. Okay, great. So now we've understood all the individual pieces, support, resistance, and trend lines. For Section 3, let's see how we can put all of this together in a real market scenario, especially when it comes to something called breakouts. A breakout. This is that powerful moment that pretty much every trader's waiting for. It's when the price makes a strong move, either crashing below its support floor or soaring above its resistance ceiling. This can be a huge signal that a new, strong trend is about to begin. But a quick word of caution here. The market can be very tricky. Sometimes it fakes a breakout just to trap traders. We call this a false breakout. And that's exactly why it's so important to always confirm a breakout with other signals, like a spike in volume or a specific candlestick pattern.
Let's make this super clear with a simple example. Let's say Nifty keeps bouncing up every time it hits the 18,000 level. Okay, so that's its support. And every time it reaches 18,500, it falls back down. That's its resistance. Now,
What happens if Nifty smashes through that 18,500 level and does it with a lot of trading volume? Well, that's what we'd call a confirmed breakout.
All right, now that you've got a good grasp of these tools, let's head into our final section. Section 4, Tips for Smart Trading. These are a few rules you should always keep in mind. Here's a little pro trader checklist for you. First off, the more times a support or resistance level is tested, the stronger it's considered to be. Second, trend lines on higher time frames like the daily or weekly charts are way more reliable. Third, please don't just blindly trust the lines. Always get confirmation from other indicators like volume or RSI. And most importantly, don't rush into a trade. Always wait for that confirmation. So we've gone through all of this, but what do you actually do with this information now? Well, your next step is simple. Go open any chart, Nifty, Reliance, whatever your favorite stock is, and just try to find these support and resistance levels. Try to draw some trend lines yourself. Because at the end of the day, real learning only comes from practice. Happy trading!